Well, let's talk about Enphase. It brought out earnings last night, and obviously right now the stock in pre-market is down 15%. By the time you guys see this video, you might have seen that it opened up 15%. Maybe the dip got worse, maybe some buyers came in, I don't know. But what I'll tell you is what my thoughts are right now on Enphase. Before we get on to Enphase though, just one or two more things I just really quickly wanted to point out. The S&P 500 yesterday, bit of a strange day. It opened up really positively, and then by the time it got to about 1 o'clock US time, the S&P actually went negative. It had a bit of a downturn, so that was a bit of a strange move. I don't think there was any kind of clear pinpoint reason why it dropped, but it did. Maybe just everyone looked and went, it's been a good run in the last kind of couple of weeks, I'm just going to take some profit off the table. But the initial pop on the S&P 500 actually came off the GDP figures for the US, and you can see it actually came in at 2.4%. That was following the 2% in the first quarter and the expectations by 1.8%. So that was obviously really good from GDP growth, and obviously the kind of fears of a recession has kind of been pushed back a little bit longer. There's always this kind of talk in the background, is there going to be a recession? Well, if you look at Q2 data, it clearly says that there's not any recession anytime soon. So I mean, if we were to have one this year, we would have to see a massive drop off in Q3 and Q4. So I think if you are going to see a recession, you'd have to think of a sharp decline in Q3, Q4, and then maybe you get it Q1, Q2 2024, but that's a different topic for a different day. So getting back onto Enphase, I thought, you know what, we haven't talked about an individual stock for a while. I'm a bit hesitant to talk about an individual stock because it seems like to me the content that you guys like to see is me talking about multiple stocks for like 3 or 4 minutes, a quick snapshot of every kind of company that's kind of making a big move on the day. But today I thought, you know what, let's just commit a video to a full stock. Getting on to Enphase anyway, so down 15% in pre-market. The reason why is obviously it brought out paywalls. Come on, Seeking Alpha, you're too many paywalls at the moment. Enphase brought out their earnings. If you actually, and I saw a lot of people doing this, is you actually look at these numbers, I think people looked and went, oh, well, they beat on EPS. Why is the market overreacting like this? And I was like, you got to dig a bit further into that. And the key thing is, what's the market thinking? Future thinking. The future thinking is what the guidance is, and that's where the drop was caused. When the market looks at the guidance, what guidance are giving us, and it was the guidance that spooked the market with Enphase. So EPS was a beat, which a lot of people were quick to point out, going, I mean, look at the beat. Beat by 0.2. Very good beat. But the problem is you look at revenue growth. Revenue growth was still okay at 34%, but it did miss by 14, nearly 15 million. So that was quite a big miss. The big thing is when, oh, by the way, this is a positive we're going to use in a little bit, but the big thing was the future thinking guidance, and that's where the issue was. So if you look here, revenue was to be within a range of 550 million to 600 million. Now the problem is when you look at the guidance, if it hasn't updated, that is, the analysts might have updated their data since then, the average estimate for the revenue in the next quarter was 748 million. So 748 million, and they came out with the guidance of 550 to 600 million. That is some downgrade in the guidance, and I saw that and I was like, it's a company now that is a lot more focused on profitability. But at the same time, that's a big battering on the revenue. And obviously, if your revenue is going to get battered that much, is that going to start affecting your margins? Is that going to start affecting your profitability? So they said here that the GAAP gross margins will be within a range of 41 to 44%, and non-GAAP to being 42 to 45%. So this was obviously another thing as well, is there was a downgrade on the GAAP guidance, which I think was supposed to be a little bit higher as well. So you had obviously revenue decreasing, you got the GAAP decreasing. Obviously, you'd expect that the earnings would be a little bit lower as well going forward. Now, when we look into what the commentary was, you can see here United States for the second quarter decreased over 12% due to macroeconomic conditions is what they blamed it on. So obviously that was a big issue, seeing the US growth decline that much. Obviously you weren't expecting a decline in the US growth. But it did say the European business increased 25%, and people are actually pointing that out, going, that's actually really good, because when you look at Enphase, what is Enphase? It's a solar energy company. What is probably one of the big markets for them to go to is the expansion into Europe. So this is what people are expecting as to be the growth driver going forward. So a few people saying, hey, this is a bit of an overreaction because actually Europe is still growing 25%. I think the big surprise though is that obviously the US did decrease 12%. And I think looking at the guidance, as you can see here, the big thing that you might be suggesting, obviously the revenue will decline next quarter, is that going to be still on the US market, or is potentially the the weakness also going to creep into the European market. But it is also worth shouting out that the board did say they were going to buy 1 billion back of shares, which obviously really good. Obviously the company does make major amounts of profitability, so they do have the ability to do that. So that may be a bit of a positive that a few people ignore just because of the outlook that did come in here. Now, as we can see here, the board at the moment are blaming this on economic factors or macro uncertainties that are causing this dip at the moment. Obviously, we heard last quarter that there was going to be weakness, and actually at this point last quarter, I looked at this and went, I saw the dip last time on Enphase stock, and I went, is this now an opportunity to buy on this dip? And I thought, okay, you know what? It looks like there's some weakness coming in here, but Enphase were a little bit hesitant to admit there was a bit of an issue with the sales at the moment. And I thought, if this carries on, it might go a little bit lower. So I was actually interested in buying this one not too long ago, but because I was like, I'm not sure if this will get a little bit weaker myself, I didn't actually buy. Now, obviously, we've got another quarter, and now Enphase are a little bit more open, going, we have a little bit of a sales issue, and that is due to the macro environment that's coming out here. Now, I think there's a lot more going on, personally, in my opinion, than just that. What I think is actually going on with Enphase is that if you look at the growth of Enphase, the Enphase growth has been absolutely insane, especially since the CV times. Previously, they were growing at really good rates, but we saw the boom coming out of CV, and recently as well in 2022 we've seen 70, 80, 60+% revenue growth from Enphase, which has been absolutely aggressive. Now, why is this growth in particular being really strong? Well, one of the big things is obviously the energy crisis. The energy crisis has basically forced everyone to go, oh, look how expensive gas prices are, electricity prices are. You know what would be really good is solar power. That's obviously going to be really good for the planet in the future, and obviously will save me money with the energy crisis situation. So I think you've had a surge in people jumping to solar because of the energy crisis going on at the moment. Now, the big thing is what's going on with the energy crisis. Well, if you have a look at any kind of Brent crude, if you look at any sort of natural gas, that have all started going down. So people looking at it going, oh, you know, one of my big reasons was to switch is because of the increase in energy prices, but they look to be coming back down now. So that's probably one thing that's stopping people from actually going to go get solar panels in their properties. The other big thing as well is it's expensive. You know, to get these panels put on your house, you're talking thousands of dollars or thousands of pounds or whatever your currency is. It's going to set you back a little bit of money. And what's happening at the moment? Well, if you want to take on some finance to maybe pay for this, the problem is interest rates. Your interest rates are a lot higher than where they were only 12 months ago. 12 months ago, you were still picking interest rates up at 3% maybe. Now you're talking 5 heading towards 6% interest rates. So with higher interest rates, that's stopping everybody from going and buying out higher expensive items. And that's personally for me why I used to own some higher expensive items and or stocks, and I sold them off. I had shares in Tesla, and I was looking at Tesla going, I don't think people will want to go out and spend in this macro environment and buy a brand new car or take the financing of a brand new car on. And obviously, if you look at Tesla at the moment, what's they had to do? They've generated good sales, but they've had to then make the cars cheaper to sell them. Also, I owned Lovesac, a higher end furniture company, and I was looking at Lovesac going, do people want to go out and buy a new sofa for £3,000-4,000? They're probably not going to go buy houses. They're probably not going to go buy a new sofa if they're not buying houses, or even the people that are in houses that want a new sofa. Are they going to be right now willing to go out and do that finance at this higher interest rates? And I was like, I don't think so. So that was unfortunate. As much as I like Tesla, the reason why I sold Tesla off, the reason why I had Lovesac, and I really want to own Lovesac, but I think it's going to be a tough kind of couple of months, because when you look at the interest rates at the moment, are they staying stagnant? They're not going down. They're not staying stagnant. If anything, when you listen to the Fed at the moment, they're going to carry on putting them up. And if they don't put them up, then it looks like they're going to be holding them probably flat through towards at least 2024. So this combination of the reason why people were trying to Enphase into their properties is kind of going now, because the energy situation is getting obviously a lot cheaper, and then the cost of having it done on a financing point of view is obviously also going to put people off. So you've got two kind of major factors that are kind of going on here. And what this kind of reminded me of is for Enphase is that we've seen this really good financial boom, but it's kind of been helped and surged by environmental factors that have helped them. Bit like when you looked at a lot of online retailers in 2022, you saw a lot of online retailers that might be selling either online clothing or online computer parts. And I learned this personally from owning these companies. They saw a demand surge pull forward because everybody was at home and wanted to do online shopping. And then when you got out or past that surge, unfortunately, then you were hit with the tough comps for the next kind of 12 months. And a lot of those stocks got killed massively. When you look at Enphase, it's like deja vu all over again. You've had the two perfect combination factors of easier to get financing and also energy crisis being so high. And then you've gone to a point of view where financing is more expensive, and also then you've got the energy situation calming down and the demand is suddenly gone because so much has been pulled forward. So I'm looking at Enphase here, and obviously they've given weaker Q3 guidance here. Obviously we've had a weak Q2, weak Q3, but unfortunately, I mean, they haven't changed much on the longer term basis forecast. But from my point of view, I would expect another kind of weak Q4 here, and potentially once again a weak Q1 if this situation is going to continue. So from my point of view, I would expect Enphase to still make a bigger downgrade to their full year guidance, and I would expect these macro factors that are kind of going on to be more persistent than just in Q3. I would expect them to kind of be a bit more persistent into the likes of Q4 and Q1. So I think at the moment, unfortunately, Enphase has a bit of issue where it's had the kind of a CV boom for what similar to what other companies had. They've kind of had an energy boom, and now they've got a couple of tough comps coming in, and I think they'll sit on these tough comps for the next kind of 2 or 3 quarters, unfortunately. And I think that might mean the share price will maybe see a lot of pain and maybe continue to see pain if the revenue is declining on the rate that it is doing. That then hits the gross margins. If that hits the profitability, I think Enphase could be in a little bit of pain for the next coming couple of quarters. However, given saying all that, as you can see here, the Europe business could still be a major growth factor for them going forward. Solar is still going to be a major part of the business going forward. And I do think Enphase, as the market leader, will still be in a good place when you look at the longer term, 3, 4, 5 years down the line. So for me, I'm starting this as an opportunity that I've got this on my watch list, and it could come an opportunity. The problem is that I think the pain could continue for Enphase for the next coming maybe 12 months max. And then we start to see maybe the recovery start happening. So I'm starting this now and going, is the stock market, and we know the stock market can do it, we've seen it only recently in 2022, sometimes they can put stocks to really stupid levels. And I'm seeing if Enphase is gonna get punished. If Enphase gets punished and I'm gonna put a silly price target, and if Enphase gets there, then it could come an interesting buy for me. Now obviously looking at the moment, it's around 50 times earnings, which obviously at the moment when I look at forecasts, obviously these are going to get updated now, but they're expected 28% growth this year, next year 22% growth. So we are going to see a slowdown more than likely in the growth going forward because it has just been crazy, but still 20+% growth with the profitability that they could potentially do is pretty good. Now at the moment it's trading at a 31 times earnings forward PE. Obviously there's new factors to come in with potentially lower amounts of profit. Also you're thinking the share price will be coming down. I would like to see potentially me pick this up into more the teen range on a forward earnings basis. And that would be somewhere if I can see Enphase share price. Obviously it should open up at 142 today. If we were to have a 2 or 3 bad quarters, I could see Enphase on the share price point of view get pushed down towards the kind of $90, $80 range. That is where I want to see it, and that's where I'd be really interested to go, okay, the risk to reward here is now for me to kind of buy up and see hopefully the turnaround start coming in as it kind of takes the tough comps. We'll see what happens. Obviously Enphase are going to combat this the best they can and try and make the financials look a little bit better, maybe focus on profitability. They're probably going to look at burning through, I think they did mention it actually, they're going to look at burning through some inventory as well, and obviously that maybe help them a little bit. But for me, if this comes rather than a short-term issue that's suggested, where they're only giving Q3 guidance that's a little bit wobbly, if this ends up into a full financial cut down in 2023, and then also quite weak guidance heading into 2024, I think if I play the waiting game, I could get the opportunity on this one a little bit cheaper. And I think in the long term, Enphase is a good company. But without doubt right now, it could see pain in the next kind of 12 months, and that's what I'm waiting for, if I can get that opportunity. So I'm going to try to be patient with this one, but if it does give me the share price I want, I could pull the trigger. So let me know what you think. Are you an Enphase fan? Are you looking for a certain level before you do buy it? I'll be interested to hear your thoughts as always, guys. Hope you enjoyed the video today, focusing on one stock for a change, and if you could, hit the like button, and I'll catch you on the bit.